listen, you read the tea leaves and you think that we've kind of got a handle on it. Look, we went up 1,000 points on the Dow, going down about 500 days. We look at the closing imbalances, Kelly, it's pretty evenly split between buys and sells, so I don't see people leaning into the close. The other fact that you got to contend with is the fact that this is a holiday week, and there are a lot of people that are just not manning their desks or they're using skeleton crews. So you can see some of these moves are exaggerated because of the lack of liquidity.
Yeah, and the
all
lack
that
of
being said,
yeah, Gordon, the lack of liquidity we spoke about, and it's hard to tell whether to blame that for the deep sell-off, but at some point, regardless, stocks look attractive here, right? Or Santa Claus shows up this week like he's typically supposed to do, or you get a January effect, but there's nothing you can really point to right now to get it to take us higher, can you?
No, I think that there's more questions than there are answers right at this moment, Kelly. I mean, one of the things that concerned us a little bit today was some of the consumer sentiment. Look, you can look at GDP in China and you can look at some of those numbers, but the Chinese consumer isn't what drives the economy, the global economy. It's the American consumer. And right now, if that confidence starts to wane, then that's just another reason to be concerned as we head into the new year that we're not going to be able to grow this market. I think right now, as I talk to some of the folks that maybe are off the desk at the moment, they're putting their stop orders down below. They're not so concerned about buying on the dips. They are keeping an eye on the volatility. They are noticing gold, and they're sort of taking a very defensive posture right now. So I think right now the mood here is somewhat cautious, but also a little bit leery, and we're going to have to just ride that out the rest of the week and then see what January brings.